Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, April 22nd, 2024. It's 10:53 a.m. Eastern Time. I'm starting the video, so we're about an hour and a half into the trading day, and figured it was a good time to get one out. I got a couple charts out to you today, but let's just go over a few things. Start out with the markets and things related to the markets. I'm going to start there, and then just hit on some. It won't be all inclusive, but some of my favorite trade ideas right now, those that I think have some of the best potential. I'll try to do it in this order. I've kind of got a rough sketch down, and I may add some towards the end. Sometimes I do that, but we'll start out with QQQ and the magnificent, or formerly known as Mag-7 stocks. Maybe a quick breeze over the S&P 500 sectors. Liking that wheat got out today. It's coming up on that. It's actually taken out that T1 level, R1. Been waiting for that for quite a while. So that's a pretty nice buy signal there. Natural gas, crude oil, treasuries, investment broker dealers, that's IAI, the ETF, or any of the individuals, and then home builders. Again, time permitting, or if I do my little tangential thing, sometimes I cover one thing, but that's either related to or makes me think of another, and we kind of go there in the video. But I'll try to keep it in that order. So starting out here with QQQ, like I said to you this morning, we pretty much started the week where we ended. We hit T2. Remember, that's from swing short all the way back here, the day after the Fed meeting. If you're holding out for the prize, these are really just what I call intermediate term swing targets. I still have longer term targets on the weekly charts, but let's see if and when we get here. Talked about it quite a bit. We've got the 200-day moving averages coming in right around that T4, and I'm still maintaining T5. If you want to play it safe, that's probably a good place to cover if the charts confirm at the time. I told you, and it's getting 5 or 10 steps ahead of where we are because we haven't even gotten down that far yet. But I think we might undercut the 200s briefly and then rally to close the week, or a day, two, or day later, the same day. We'll see. Again, we can only assess the charts in real time as they develop. So today, here it is. We're just turned red, and that's why I wanted to start the video. We're still above T2. As I like to and very often say, support is support until unless broken. Like I said on Friday, I thought the odds favored a reaction there. At the end of the day, I closed out those longs. It just, what happened that day, I was watching very closely. QQQ did consolidate, and I think I might have posted that update there. This is Friday, but right here, let me show you what I'm looking at. I just toggled to a 1-minute chart. There was Friday's open. This was NVIDIA. So NVIDIA, because remember, this was the one, we already got my QQQ 433. We already had each sector that notched off, all top five sectors break down. So those sell signals triggered. We had a couple of FANGs that have already, or Mag-7 that were already like I said, Tesla and Apple no longer magnificent. And we were waiting on, and still are, a couple more. That's what I'm going to get to in the video. But what happened is QQQ did consolidate towards that end of the day there. But NVIDIA, they were just selling. Stops are getting hit. As I said, well in advance of it happening. Put a post out last week that this now, would be the most important thing to watch. NVIDIA taking out 840. And if you're new to this, new to technical analysis or my style of trading, if that doesn't illustrate, exactly what I'm talking about there, see, we didn't just limp on down through there. Once it gave way, and again, it's a daily chart. Once it was clear that it was not going to be recovered by the end of the day, you have the biggest down day, the most profitable shorting day for NVIDIA, for the Nasdaq 100, for whatever you wanted to short. And so, if there were any doubts, because I've sometimes hear on CNBC and others that you can't, charts can't tell you where the market's going, or, again, we use this to nail down with precision, German, Swiss precision, when to get aggressively short. Yeah, I shared my thoughts. So before we even broke down, I was aggressively short because it appeared imminent. We had enough check marks. Remember, for me, it's not any one single check mark. It's just a compilation of evidence. So there it is. So it went down. The dip buyers do what they do. There's been just a ton of FOMO, people wanting to get in. So just, guys, the takeaway here is, remember, when the VIX is elevated, which it most certainly is, when volatility is high, the swings go pretty good in either direction. And I'm going to go over levels. I'm going to share my thoughts right now, where they're at, potential targets, both on the up and down side, objective short entries add-on, objective long entries. I'm going to go over all that. But what I wanted to say, and I'm just going to say it right now, and I say it over and over, but to be very clear, nothing's changed on where I think we're going. If my confidence back here and here was high enough to give you these targets and to tell you that I thought we were getting there, based on everything that's happened, starting with just in the last week or so, the break of 433 and the back test and rejection, then NVIDIA breaking down. So if my confidence was high back then, very high, it's extremely high now. And there are no guarantees, but my confidence could only be higher because this is all playing out exactly as I figured. We didn't just break down. Once we got the NVIDIA confirmation, that's where we started waterfalling. And so where I'm going with that is, trading counter trend bounces. If you believe you're going from point A to point B, and that's where most especially analysts on TV, they're going to give you a price target, but no time exactly when to get there, and not how. I really focus and make my living on the how. First of all, where we're going, and then how we're going to go there, and you can get those counter trend bounces. But again, I'm doing this video because I've seen these. Remember when I told you I told you before, I'd had very little. Once we got the break of 433, that I didn't plan on gaming a reaction off T1, and I didn't, and then we didn't. We went right through there because I said the consolidation would probably minor, if any, and we did that. Now T2 is a more significant level. There's a higher chance of a bounce, and right or wrong, I'm already right because we've had a reaction. That's why I list multiple targets. We had a reaction when T1 was hit. T1 was, by the way, the 425 level. We kissed it to the button at the lows, bounced on that day. That was last Wednesday. Then we bounced on it the next day, kind of like we're doing right now, but then gave it up at the end of the day. See, again, the white line. I just added this purple line today to give you a overhead resistance level that if we bounce that far, it would be an objective level to short. In fact, I gave you or a couple subscribers this morning, if you go through the last couple posts, one from Friday, I think, and one from today, I gave some potential bounce targets for you. And one of them was here on the 60-minute chart. No, it was NQ. Yeah, well, let me pull it up. Okay, I'm on the site. I think it was right here. And somebody asked down here. Yep, it was right. I know I posted out. There it is. Arrow breaks on the 60-minute chart denote potential bounce targets, including the downtrend line. So this is a 60-minute chart of NQ. There's the downtrend line. We were a little shy of it, so no room for me to draw the arrow or likely reaction. So remember, these are all resistance levels, and the way it works is resistance until unless taken out. So if they take that out, that would open the door potentially for a move up there to maybe 17,600-ish, and then that's 17. I've got two really close lines together, about 17,800. You can see I dotted this because I really doubt we're going to get anywhere near 1,846. I think too much has happened. I have too many check marks. Possible if we get there, it would be, as I said last week before we even got down this low, I would not be shorting about. Now, there's still plenty of resistance. We could go in there and fake out. Again, anything is possible. I'm showing you what's probable. Probable would be very little, if any, reaction. A bounce might be small. And what I want to say, too, is, trading counter trend bounces at this point, we're kind of just in the middle of my targets. We're only halfway there. It's kind of technically no man's land. There is some support. Again, case could be made, as I made on Friday and again today. Go long at that support if you want to game a bounce. It is picking up nickels in front of a steamroller, in my opinion, but you get enough nickels, it's worth it, and I talked on that on Friday. The end of the day, because NVIDIA was just, you continued to sell down, as I showed you. By the end of the day, I just closed out just to not risk, because remember, as a futures trader, I'm comfortable any day of the week going home except Friday, because Friday futures do shut down for the weekend, don't pick back up till Sunday. But then Sunday night, futures are stable and into this morning. And so I'm doing the video right now. We're still at that level. So there's NVIDIA is on the daily chart. Remember 840. Again, I cannot over impress the importance of this. Somebody brought up the fact that the Dow was actually marginally up or whatever, and the S&P was only down. I forget the numbers, 3% or 2%, and then QQQ was up 5%. And said, it's just random. It's not. This is why, and I replied to that. I said over and over why I'm not shorting the S&P 500, why I don't think it's a good idea. It's full of dividend-paying stocks, defensive issue stocks, and I always say it's simple. You're either going to be right or wrong in your call on the stock market. You might as well get paid for it. And there are times I will trade the SPY over NQ or QQQ. But right now, the two things I've been, as far as indexes go, and I've been harping on, are the Nasdaq 100 and the Russell 2000 for two different reasons. The Russell 2000, because of the whole market was completely wrong on the Fed, where they'd be and where interest rates and inflation would be. Small caps are more rate sensitive. So with the 10-year bond going down into my orange zone, that's a very simple no-brainer. And it ignored it for a little while and then played a game of catch up. And then the large caps, basically two things, really the technicals first and foremost. Again, first and foremost, NVIDIA breaking down from its trading range, QQQ breaking down from its comparable multi-month sideways range when it took out 433. So that in itself, coupled with the AI bubble, the extreme bullishness in the market, just telling me that there was FOMO. And again, it's not opinion. It's you can read up on the articles. You can look at short interest, which I told you a few weeks ago I did. And so when you have those extremes, big moves come out of that. And so where I'm trying to go again is, yeah, there might be a counter trend bounce, and there still may be. We're pushing it. They tried to rally it today, sold it just like the other day. Last time we hit T1. I'm kind of going all over the place here, guys. T1 right there. Hit, rallied the next day, and then closed below it. And I told you that day when we closed below it, the second day, that would open the door for the move down to T2. So again, this has been called out play by play with impunity so far. And we're still, the bottom line is, guys, we're still above T2. And if you do care to game a bounce, again, targets were posted for both QQQ. Here's some levels there. The downtrend line's a little bit different on QQQ. NQ, we just hit it. Oh, yeah, I'm all over the place. But I showed you on NQ earlier that's what I posted this morning. And look, boom, we bumped into it right after I set that. There's the typical reaction. It's the first tag of that trend line since last week. And so if we hold, we're still at support on the daily. So I suspect we'll go up. So now, if I thought it was a valid trend line this morning, and I had it since last week, if I thought it was a valid trend line then, it's only more valid now because we just had a fifth. That's 1, 2, 3, 4, and now 5 confirming reactions. So what does that mean to me? Well, if they pop it, there's probably going to be a lot of stops on short sellers that shorted into it or longs that buy it. So the next pop could potentially take us up here. However, as I like to say, resistance is resistance until unless taken out. Just like support is support until unless taken out. It's pretty much Friday's lows is the support. Remember, we hit almost perfectly my second target on QQQ at Friday's lows. This is it right here on the, nope, that's on the 60. There it is on the daily. And so that's it. So it's pretty simple. There's no guarantee, but it's pretty simple. If we take this out and it's anything more than a intraday whipsaw, and it could be, that would be a great little bear trap. Take it down below Friday's lows, pulling some shorts. And look, we could just bleed right down to the next target. I told you before that the selling should begin to accelerate as we got down. So again, if you're going to try to trade counter trend bounces, do not get married to it. Know that you're picking up nickels in front of a steamroller. I gave you a few bounce targets and favor the shallower targets. Why? Because there's a lot of, and I put this in one of the replies this morning, there's a lot of trapped rats trying to get off the sinking ship, meaning longs that had bought in and just believed, all the hype out there about how good a year it was going to be, and there's no chance. We went from soft landing to no landing, and everything's hunky-dory, and the economy's super resilient, and the lag effect on rate hikes no longer matters, and the business cycle has been repealed, and the Fed will always buoy the market, blah, 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 blah. So that was really the driver into the beginning of the year and so far. But then, again, the momentum stalled out and we broke down. So now Like I said, it's, nickel's in front of a steamroller, but I still, as long as we're above that T2, you can make the case for a bounce. And this is the level I added to that chart here. It's I'll call it a max bounce target or potential bounce target now, about 422.80. And let's see where that lines up with my 60-minute chart. And there it is. There's that same purple line. I don't think we're going to get anywhere near 433. I think this was too beautiful a short setup, too much bullishness in the market, one-sidedness, and too many. Everything lined up so perfect. That's why in the last few weeks, even for months, despite a lot trying to, seemingly knock me off my bearish outlook and say I'm crazy and all those comments, it was clear, that if we broke this level and based on where we're at, that's what's going to happen. And so point is, there's still more downside, and easily we could just go on right through here and go on down to those next targets. And just as easily we could bounce. And I'll show you why. Here's why I do the video. I'm sorry, too much on that. You kind of got the levels, pretty simple, trade as you want. As I said many times in the past, I'll reiterate, if you are just Randy, what are you doing? Do I go long? Do I go short? Have a trading plan. If you're not an active, nimble trader, when I say nimble, because if we bounce today, which I still favor, we're still there. They sold the first pop so far, kind of... a lot of sellers. That's pretty dang bearish. But we're still above support. If they can start to rally it, what's going to happen, just as it starts to look good, and just as the bulls start to come out of the woodwork and say, it was a great buying up, and we're going higher, and that's probably when it's going to just fall apart, and they're going to sell into it. So that's why I wouldn't hold out for a move up to 433. And if you do think we're getting there, let me give you an easy strategy. And it's a lot easier with futures that trade round the clock. Not QQQ, because it won't happen in one day, or at least unlikely. But if you want to hold out, because sometimes it's hard to gauge if we get a bounce how far they're going to go, just trail stops up. Periodically, you can ratchet, or meaning raise your stops, or put a trailing stop. I will say when the VIX is high and volatility is high, a 1/4 point or 0.5% trailing stop on QQQ, it just ain't going to work, folks. Due to the volatility, let's just look around. I'll show you what I mean by that. VIX is elevated now, and I'm just going to, here's today's high. We opened from where we closed. We're as high as 0.9%, so about 1% up on QQQ, and then we turned around and we dropped 0.9%. And that's just run of the mill. That's these little counter trend moves. So right there, you can kind of see there's 1.24 drop. There's a 0.75. So that kind of gives you the range. It's roughly 1%. And even then, sometimes you can just pop that. So you just have to figure that in. And the benefit to a tight stop is you lose less, or you protect more gains. But the con or advantage is it's easier to get stopped out if you're correct on, you want a game of bounce, you think's going up to here, and you get stopped out on the first move up. So, all right, let's go over the rest of the charts and tell you why I'm still favoring. And it's a good time, if you care to game of bounce, you can buy it here, but don't get married to it and be ready to flip back short if you're an active trader. The other things, I spent a lot of time talking on QQQ. It's important, but QQQ is everything. We're not even talking about SPY right now. Time permitting, maybe I'll cover it in another video. The Mag-7s, or formerly known as Mag-7 stocks, we're going to go through those. Okay, so the sell signals that we did get, Apple, all the check marks just in the last week or so was Apple. Like I said, the most bearish thing I've seen in a long time. It was the most bullish looking. And I almost assure you 99 out of 100 traders thought that was the most bullish thing they'd seen. High volume, clear trendline break, and I predicted it would fail, and it failed. So the fact it failed is pretty damn bearish. Now, keep in mind, it failed. We took out my purple level, but we're just below it, and we still have positive divergence. So I'm kind of driving right now. I'm very cautiously long at this point, just to see if we can game a bounce. But if Apple can't get back above here, and I'll tell you right now, technically it's below support. So if it can recover now today, it has a chance. But based on this, it's probably not going to go too far. Really, I don't think so. That was a pretty damn bearish thing there. But we'll see. And if it does, look, it regains support, and that's going to be bullish. You might want to hold off shorting until it falls back below. That's a safe bet if you're trading Apple individually. But let me show you the rest of the lot, if you will. NVIDIA, I already covered that. That was the biggest one to me last week. I said, when this goes, that'll be your kind of death knell blow to the market, and it was. However, remember, there were a total of the formerly known as Mag-7 stocks. One of them was Microsoft. And yes, we got the check mark, the trend line break and the impulsive drop. Also the failure back into this trading range, which, as I said, it would take us most likely down. Next stop would be the bottom of the range, which we did get. And we're right at that 397 support I've been harping on for months now. It was this trading range. So I want to just say that Microsoft, the largest of all of them by market cap, the only 3 trillion one right now, still as of today, my platform showing me it's a 3 trillion just on that number, is at support. And it's not at support, it's at key support. So it's kind of do or die. If Microsoft breaks that, that's a check mark for the bearish case. A solid move, especially daily close below 397. We're at 396.95 as I type. It was just 397.03. So here's the thing. There's still a chance they can come in and buy this. These are really the last holdouts. And guys, it's almost baked in the cake that it's going to break support. It's just, is it going to do it right now as I'm doing this video, or by the time I get out to today? Quite possibly. I just want to point out, but it's still there. And again, these are last holdouts. I have what, out of, let's just say 20 check marks I was looking for, I have what, 16, 18. This is a holdout. I just wanted to point that out. And the odds are, like I said, as high as I can give it. We're going to go lower, and this will break. It's just a matter, does it break today, or do they get one little hurrah of support or not? The video I already covered. Alphabet's still hanging in there and still above that yellow 149.46 level. Remember, I didn't really have it's the one level one stock I didn't really have a super well-defined support level, but it's still holding in there, and you can't say it's rolled over. It's off the highs a little bit, but that one still needs to go. And that is the level I gave you, and it's still above it, 149.46. So there's still a chance here to get a little rally today. Could even last, day or two, maybe this week, who knows. Amazon's still comfortably above also my yellow level, which is 165.74. So these are the lights out levels. So remember, check mark wise, as far as the market leaders go, Microsoft, no check mark yet. Well, like I said, the yellow, we got little check marks here, but the big one comes on a break of 397. Apple already gave me check marks a long time ago. NVIDIA gave me a check mark on Friday. Alphabet, no check mark yet. Amazon, no check mark yet. Needs to take out 165. So, and I put a very high weighting on these stocks because they are the market. Okay, these stocks are the stock market. Oh, and then Meta. Meta, remember my yellow line? The most important is this big, fat, thick uptrend line off the October 2022 lows. And we're close enough. See, Friday we closed right on it, and today we're a hair below it. It's intraday, could rally up and close on it again. And I had also a pretty good price support level here at 476.69 right there. It's been this trading range here, multi-month trading range, and so there it is, guys. 3 of the fangs, or the former Mag-7, are still holding up. And that's why I still think there's a decent chance for a bounce. Just one that you don't want to get married to, because if these levels go, I don't have a whole lot to, not a lot of technical evidence to make a case for a bounce. So there it is. Wanted to get those out of the way, and that's it. So as I'm doing the video, where right now T2 is 413.41. Again, Friday we hit a low of 413.07. Today we hit a low of 413.94. That's support holding so far. So there's your big level, guys. Now let's go over to the other thing. So wheat. This one has just taken a while to really develop or play out. It was thrown out most recently as a trade idea here on a break of this uptrend line, which we got. we hit, but then I said and or R1. And or means you can take a starter on the breakout above the trend line, or on R1. R1 has been resistance. It was support back here, then became resistance again. And so as I said this morning, we broke out, back tested the primary downtrend line right here, moved up, and as of right now, and that's could change by the end of the day, it's above it, and it's clearly, you don't have to squint. It's only a $5.50 ETN or security, so it's if it was 3 cents above, and look, they've come back in a little off the highs. Like I like to say, the greener we can print this candle, meaning the farther you get away from there, the greater the odds that it will stick. And it's also a way to diversify. So I like this one. And, right now it's a breakout. Breakout fails today, then it fails. And then you wouldn't want to add to it. And then you'd be more concerned, where do I stop out? We already back tested once, had an impulsive rally. You don't want to see another back test. It could do it and take off, but anywho, I like wheat here. Corn in ZW wheat futures, that's what I use, but trade wheat futures, you can do that. Corn is going to move in line with wheat, and it's also trying to punch above the downtrend line, but it had a slight punch the other day, and then it has this trading range right here it needs to clear, and then it should run. That tends to move in line with wheat, give or take. Some one will go up a little more, and then the other one will play catch up. Okay, so just a way again to diversify. And natural gas, UNG or NG, I like. Natural gas continues to hang in there. We had that R1 S1 zone, that means support resistance zone. Remember we were in here long, rallied up, hit T1, hit it again, pulled back, and the divergence is getting bigger and bigger. So right now, really, we need to clear that level there, those recent highs, and that should open the door for a move up there. Crude oil, USO, has pulled back off my orange zone. Remember I said you could short crude as a kind of a hedge to index shorts, and they both worked out. The short on crude did, and the index fell as well. So there's a great example of an indirect hedge that can play out both ways, work for you on both directions. So we're back in the yellow zone there. 60-minute chart, however, has some support right here. I don't have a strong opinion on where we go from here. But remember, just because we've fallen out of the orange zone, the yellow zone is still where it matters, just like my treasury bonds. It's only bullish to me if we fall well out of the yellow zone. The green zone would be down below. And they're color-coded that way, kind of like a stoplight. With green or whatever, green, and red is where it really starts to take note. And that red is also resistance. It's not a randomly placed level. So we rallied into it, pulled back. So crude prices are still putting pressure on the economy and inflation numbers, and and remember too, I seem to be like the only one that can do this every time. Well, I don't do it every month, but every time I have an opinion, I do the hey, let's guess where inflation is going to come in this month, and we look at DJP, one of the broad-based commodity ETNs or ETFs, or we look at crude too, and boom, we're usually right. I can tell you when with it's been track record, it's been pretty good. Whether we're going to come in hotter than expected, the expectations, the consensus numbers, or cooler. If there's, the market's not looking at this, because this is our real-time inflation indicator. The rest of the stuff is lagged, and I don't have any way to tell you if the loaf of bread, went up last month or everything else. But we can kind of extrapolate what's going on in the housing market. Anywho, so there's that. And look, this is also, crude has been coming down despite the ongoing tensions in the Middle East. And so there is an abatement right there in both inflationary pressures in real time. That's a drop of about 7%. And that should be reflected in it so far in treasuries. We're not doing much, but treasuries right now are holding up. They're not falling anymore. Remember, when rates, this is IEF, treasury bond prices. It's been falling. Lately, it's just holding up in the last few days. I'm actually seeing CB and ZN. Well, ZN's about to break even. I'm looking at ZN, the 10-year treasury, on another chart. And so if it was doing this, I'd say, look, the stock market, remember, if it does, and it'll probably get there, that's when we're going to be, we get down here in the red zone, we'll probably be approaching my T4, T5 on QQQ. So I'm keeping an eye on this. And so far, we're stabilizing. What I think it is, I think we're getting a flight to safety bid from what's happened in the stock market last week. And that's kind of holding treasuries up where they might normally have continued their ascent. But there's that, it's a positive feedback loop, guys. That's why I watch both of this stuff. Treasuries, not both of this, all of this stuff. Treasuries, crude oil, stock market, the market leading stocks. And then, as I said, I'd cover in there. I still like IAI very much. Broker dealer index. What happens is broker dealers, you can do it yourself, overlay IAI with the stock market, the Nasdaq 100 or the S&P 500. It's a strong positive correlation. When the market's going up, I'm a rare breed. Most people, you go to a cocktail party, go to your office at work, talk, ask how many people short stocks actively. Very few, if any, that you'll meet. No. People do it. I do it, I do both sides. Most people are long side only. Therefore, when the stock market's going up, especially when it's really going up, these broker dealers are making money because there's more activity, more people buying stocks, more trading commissions, more money coming in, being wired in from the bank accounts, and and likewise, when the stock market goes down, their profits plummet. Even though the stock market's going up, yeah, they're short sellers making money, but they're a very small fraction of the overall investor base out there. So, anywho. This one's not still in the bear flag. Remember, I told you we already hit this T1. I said the next sell signal here will come, or objective add-on or new short entry will come on a break. I'm trying to get my line tool here. Break below the bear flag. That's your flagpole, bear flag. There's your measured target. But if the stock market can rally off support here, all ships are lifted with a rising tide, so we may continue up. They may even foil the flag. If it goes up much more, then the flag's not valid, but it's still a valid short trade, and it doesn't change my longer-term outlook. There's a breakdown, a back test. We may come up a little higher, but I still maintain these targets. And if you're looking when to add, again, add on a break of the flag. I showed you, and that's what I said last week. It hasn't broken yet, or add if the market cracks the T2 support and the floodgates open, and if Microsoft breaks down, and what was the other one I gave you at support? Meta and Microsoft, both at support today. The last that really, no, not Alphabet's holding out too. So you still have a few holdouts in the things, or Mag-7. Half of them are broken down. 4 out of the 7. The other one is XHB, but again, it's going to bounce with the market most likely, like it is today. But just a beautiful breakdown, back test, then a break of the first support, head of the first target. And the way this works is it's like being bullish in reverse. Bulls buy pullbacks to support, bears rally, short rallies into resistance. And you could probably even put a little downtrend line there. There's a gap right there. So right here, there's a resistance zone with that gap. So that's a potential bounce target if you're looking to, if you missed this or you took profits on Friday because the market hit T2. That's how I often trade if I have sectors or individual stocks. When the market hits support, let's say, QQQ hits support, that's when I'll cover, which I did, for example, I covered my SMCI. It's actually down today. And that was the first time since I shorted it, right off the highs. Because again, the RR is not so favorable right now for new shorts. NVIDIA came very close to my 742 support. SMCI is, the Robin of Batman and Robin to NVIDIA. NVIDIA is the Batman, and SMCI is its little sidekick, so tends to follow it around. And O was also at support. So there it is. And when it breaks that's still my sole price target, and that's where it's going. But I'd like to see either this bounce run its course. We haven't had it yet. We're still flat on the Nasdaq, but I suspect we could still bounce today. We're right there right now. It's even better than this morning when I got it out to you. Is an entry here with very, very, very favorable RR for a bounce trade because it's just TA 101. Buy support, trading 101. We came down as low as 413.94 today, right above that level. And again, I can't speak to QQQ traders, but NQ traders, there's no overnight risk. So you can, set a stop below today's lows or Friday's lows or wherever you want in NQ if you want to try to game a bounce. You can even do a stop and reverse. What does that mean? Again, depends on your broker. Interactive brokers, if you're 10 contracts long NQ and you want to go, that's your position size. I'm not on NQ, but let's say it was. You can have a stop loss order to sell 20 on a break of whatever level it is. So what it'll do, if you go back down, it'll in one fell swoop, one order, sell 20 NQs. You're already 10 long, so that's going to put you net 10 short. That's another benefit of that platform there. It's geared towards professional traders, and that's one way you can do it. And the reason I say that, let's just say you go home, everything's hunky dory tonight, and then all of a sudden Iran starts lobbing some more bombs over on Israel, or something else happens and somebody blows something up they shouldn't have over there, and things start to escalate, and it happens at 3 a.m. Well, your NQ, you're going to stop out. If you're long, you're not going to wake up to a 3, 4, 5% gap down, which you would on QQQ, and you can't get around. So enough of that. Again, I don't work for a futures exchange. I don't work with anybody. I intentionally have always over the years declined any offers to do that. So I'm not trying to sell anybody on anything. I'm just telling you one of the reasons that futures, especially in a volatile market like this, I prefer. So again, you can kind of mitigate your losses anytime other than Fridays, Friday night until Sunday evening when they start back up. Okie doke, guys. I'm going to end it here. Just reiterate, we are at support, day 2 of holding support. And you have potential bounce targets. If you didn't get them here in the video, go back, look at the last couple comment sections. I gave them both on QQQ and as well as NQ, some charts. And that's it. We'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.